Hey, welcome back. Today we're talking about the predictions for 2024. So we're going to go over a couple of them today. Redfin, Zillow, and like the Ramsey or Rocket Mortgage, one of those we'll kind of check into right now. Don't want to give too much information because a lot of this kind of gets detailed, but hey, let's check it out. Here we got Redfin up. Redfin predicts 2024 will be the year home buyers catch a break with home prices falling and new listings rising. That sounds a little too good to be true, but let's see what they say. They're starting to see signs of a shift toward a buyer's market and believe that more people will list their homes. So home prices they're predicting will fall 1% over the year, mostly in the second and third quarter seasons when the home selling season is back full force and everything. This will mark the first time prices have declined since 2012. So that's a favorable shift for buyers. Prices are ending up 3% year over year at the end of 23. And monthly payments, 150 shy of its all-time high. Home prices will still be out of reach for many Americans, but will break in the affordability crisis. So here, let's check out the graph. We've got home prices. So you're increasing, it says in Q3 and Q4, and then looks like it's going down from their prediction in Q2 and Q3. So that is good to hear if that happens. New listings will tick up. Sounds like they're saying because the supply will rise more than the demand. So they believe more people are going to bring their listings back into the market. We've recently seen double-digit annual increase in homeowners wanting to sell their home. Listings will climb from 2023 record low. And yes, it was pretty low. Is because nearly all mortgage homeowners have a rate below the current level. Many are starting to accept we're not going to see the 3s or 4s interest rate anytime soon. And they want to sell before prices fall. And prediction 3, home sales will increase. And the end of the year will be up for 5%. So the first quarter, the home sales will be on pace for 4.1 million total in 2024, up from the before. Sales will continue to rise throughout the year. They'll be on pace for a total of 4.5 million by the fourth quarter. Home sales will speed up throughout 2024 as the affordability improves and more homes hit the market. Sounds like they're saying that because the interest rates are stabilizing, people are realizing, hey, this is where the interest rates are going to be for a long time, and we're just ready to move. So it's almost like not a cost pricing thing at this point. It's like, all right, we're ready. Our house, they've outgrown their house. They want to downsize, whatever it is their desires are. They're like, okay, let's just do it. This is what it's going to be. Overall, we expect 4.3 million sales in 2024, up 5% year over year. A crucial difference between 24 and 23 will be sales gaining momentum throughout the year instead of losing momentum. So, but that makes me think multiple offers are going to be kicking in until we get enough inventory. So yeah, here we're saying existing home sales, they were going down in Q3, Q4, and then they're predicting home sales, more homes will be sold increasingly as we continue throughout the year. And here it's saying prediction 4, mortgage rates will steadily decline but remain above 6%. We predict the 30-year rate will linger at 7% in the first quarter. Then throughout the year, it will fall to about 6% by the end of 2024. So that could be by the end of it. Granted, they thought it would be 5.5 this year, and that didn't happen. So again, take all this with a grain of salt. The gradual decline in rates combined with the small dip in prices will bring home buyers some much needed relief. I here, due to affordability, I do see with interest rates reducing even a little bit and more homes coming on the market. Well, hopefully more homes come on the market. That could be the difference. So we don't get back to the multiple offer craze of years past. Mortgage rates are likely to remain above the pandemic era record lows because financial markets increasingly believe the country will avoid a recession in 2024. The Feds will likely keep interest rates at their current level at the start of the year, even though inflation is largely under control, but then they're likely to cut rates 2 or 3 times starting in the summer, which is why mortgage rates will decline as the year goes on. So, okay. So here they're saying mortgage rates will decline. We're still up right now, and looks like they're predicting it's going to kind of go down to a 6.6. And it's saying industry is mostly impervious to change, is now changing quickly. For Redfin's 20-year history. Okay, well, let's kind of continue on this. Renting will lose its stigma. Okay, let's go to the next one, Zillow. Let's see what they got to say. Zillow's 2024 housing market predicts more homes for sale. That's great. And improved affordability in 24. It's got to give us some relief, so that's good to hear. So the economists are predicting home buyers will have more options, a bit more affordability, breathing room, but only a bit. That's kind of what I think. After the inventory crunch and mortgage rates rising to 20-year highs were this year's headline news items. So they're saying it's going to get a tad wee bit better. Buying a home will remain expensive, keeping pressure on the rental market to cater families. So renting is going to be, they're saying that as being longer than previous generations. Many of those who do buy will turn to homes that need some work, do-it-yourself upgrades and repairs to keep the new homeowners busy. More homes will hit the market as homeowners accept mortgage rates aren't falling. So that's kind of it. They're just, since they're not going to think mortgage rates, and it sounds like they're ready to move. Here it says, as they grow weary of waiting for the historically low rates of 2021 to return. They are saying that the high mortgage rates have some staying power, export more homeowners who locked into long-term payments when rates were near all-time lows to list their home. So they're saying that some of them are actually going to list and, go find their next one. I mean, granted, they probably have some good equity in there so they can get a nicer house. A stubborn small pool of homes for sale has kept competition fairly high for most of the year, even with high costs limiting the number of buyers. With mortgage rates rising over the past 2 years, homeowners have been reluctant to sell. Instead, they've been opting to hold on to their ultra low interest rates on their current mortgages. And we've been saying this for a while. Many of these homeowners who have their eye on a home with bigger or no backyard, an extra or fewer, or their preferred neighborhood, Zillow predicts more of these homeowners will end their holdout for lower rates and go ahead with these moves. More homes on the market. Even the gradual increase Zillow economists expect would be good news for home buyers spreading demand and easing upward pressure on prices. Home buying costs will level off, giving hopeful buyers a chance to catch up. So it's saying a typical home buyer in October would have spent 40% of their earnings in mortgage payments. Huge. Now, we don't see that as much here in Wichita, but yeah, 40%, 80%. And some of the really high, I read an article yesterday, 80% of their earnings, which I don't see how you do it. You got to stay renting at that point. While affordability will remain the top concern for potential buyers, there's reason to expect those challenges will ease a bit. Zillow's latest forecast for home values to hold steady in 2024, falling 0.2%, so barely. And the new starter home family will be a single family rental. So some more better affordability, but many households will continue to be priced out. Demand and prices for single family rentals will continue to increase next year as family look for more affordable options to enjoy amenities like a private backyard or a home that doesn't share walls with neighbors. One possible path to single family rentals, homeowners deciding to turn their home into an investment property, rent it out rather than selling it when they move. The ultra low mortgage rates held by many existing homeowners make it likely this option would pencil out. What's interesting is I know here in Wichita, we have several subdivisions that do not allow for rentals. So it would have to be in a area that would be rentable. And okay, so let's go to a different here. Let's go to Dave Ramsey. Let's see what he's got. Housing predictions for 2024. If you're thinking about buying or selling a house, wondering what the real estate market, you're not alone. housing market's seen a lot of unusual trends in the past. So if you don't know for sure, you can check what the experts are saying. Just remember never to want to let a market prediction control your housing decisions. Only your personal situation, finances, of course. So key takeaways, even if interest rates decrease in 2024, it won't be by much. Yes. I just don't see a lot of stuff, changing super fast. So tad bit, and if not by the year end, from what Redfin had said. Housing market crash is not on the horizon, even though a lot of YouTubers like to put that on their thumbnails. Housing inventory will still be low in 2024, yes. If you're financially ready to buy now, don't wait. I'll say there is this moment right this second, as of this week, next week, the next week, this through the end of the year might be a little window that you can get some good deals on some houses. I'm still shocked by some of the houses I've seen that do not have contracts on them right away, and to where you're getting a little bit of a negotiating. I mean, even my last one, I was surprised there wasn't other offers on it. In fact, I think there were. They won it, but it still surprised me it didn't have to go with those ridiculous throwing the kitchen sink and the firstborn child into the offer. And then my last listing, actually that had multiple offers, but that was a meticulous, really pretty house. So at a lower price point. So will mortgage interest rates go down in 24? They've been rising like crazy, thanks to the Federal Reserve. But the trend will start heading in the other direction. Well, it depends on who you ask. It's because the Fed is hard to predict, and even the people on Wall Street are still trying to figure out when the Fed will be cutting interest rates. But here's the deal, you guys, even if rates go down in 2024, it won't be by much. That's kind of what I'm hearing from, and that's why we're looking at a couple different predictions. For example, the National Association of Realtors believe the rates will go down in 24. They are only predicting a drop from 7.5 to 6.3 by the end of the year. Again, like this year, they were expecting 5.5 to drop down to, and that didn't happen. We kept increasing. A drop that small won't likely save you more than a couple $100 on your monthly mortgage payment. So what does that mean? It means buyer demand could sink in 2024, since a lot of people won't be able to afford a mortgage, but buyer demand will still be greater than housing supplies, which means home prices should stay mostly the same in 2024. It also means if you're ready to buy a house, no reason to wait around. So should I buy a house in 2024? So you're ready to buy a house only if you can check off these boxes. You're debt-free. You have an emergency fund of 3 to 6 months of expenses. Your monthly house payment will be less than 25% of your monthly take-home pay on a 15-year fixed-rate mortgage. Now, this is the Ramsey way of viewing. It brings things down to very user-friendly stuff. So I always like to go over Ramsey. So you have 25% to 28%. You have a down payment. A 20% down payment is ideal because you'll be avoiding the private mortgage insurance, but 5 to 10% is okay too. If you're a first-time home buyer, just be prepared to pay PMI, it's private mortgage insurance, and steer clear of FHA and VA loans. You'll pay much more in fees with them. For example, FHA has an upfront fee of 1.75, so I believe that's 1.75 of the loan amount. Like if you put 10% down, whatever that loan amount you're charging, and then VA loans also have a fee as well. I believe that one gets priced into the loan though, but you're paying much more in fees. Again, this is Ramsey's way of thinking, so there's other ways of thinking. And sometimes one thing I had read recently was it's better to buy a house if you're, of course, if everything else is, you got good income, you're staying in the place for 5 years or more, because, even especially 10 years, because you're appreciating, you're building equity and stuff like that. So, I would still go FHA or VA to get into a home versus not. But this is just kind of, again, remember the Ramsey way of thinking about it. So there's other ways of thinking about it. So, and we can talk more on that if you want more particular ideas or information. If you can pay the closing costs up front without stealing from your down payment. If you don't meet these qualifications, it doesn't matter if the market is in your favor. Buying a home would end up being a curse instead of a blessing. Take your time to get in a better financial position. And then a housing market recession means the total number of home sales has been shrinking for at least 6 months in a row. So has it been happening? Nope. In fact, home sales actually grew from May to June, again, July to August. Although for us in Wichita, we've actually seen some sales decrease, but it's only going to be for a little bit, and then it's going to pick up again in the beginning of the year. And I mean, obviously, we're in the seasonal decline toward the end of the year. Let's see. So, but even if your home sales are unstable and start decreasing consistently in 24, housing recession isn't something to worry about. So let's go down to this forecast. Will the housing market crash in 2024? If you're concerned, put those worries to rest. Not only will prices not drop substantially, but prices will actually more likely to continue rising. National Association of Realtors predicts when August 2024 rolls around, existing homes prices will be 2.6 higher than the year before. Yes, I see this. Freddie Mac expects a 0.8% bump during the same time frame. So, yeah, we still have, and I'm talking about just right now, we still have fewer homes on the market than buyers, except for this couple weeks. Like I said, this couple weeks is, I'm shocked with what I'm seeing that, let me say it this way. If I had some extra money, I'd be buying some properties right now if I could, not waiting till the beginning of the year. Or figuring out, as I have kind of looked into, figuring out how I can afford another house for a rental. Because right now is like a prime situation in Wichita, Kansas anyway. To get a clearer picture of what to expect from the housing market, let's go over 3 factors. Inventory, buyer demand, and interest rates. What's the average house price? 2024, the average house price was $745,000. Yeah, we typically talk about the median price point, which 425 in October. I'm not sure. I just saw it the other day, and I was seeing high threes. So, and that was on the National Association of Realtors. So I'm not sure where they got theirs. Well, they say it's National Association of Realtors list price of all homes. Okay, I must have been looking at November then, or December. They probably don't have December's out, but I was seeing high threes. So again, since I don't have it pulled up, it was like within the last week. This is close enough. And our median price here in Wichita is $220. The numbers just came out. I'll give you a sneak peek because and this is for Sedgwick. It's 220, yeah, down from 222. So there's a little peek for you. I'll be going over that's the November data. We just got that literally, I think, yesterday. So I'll be doing that video soon. Housing inventory simply refers to the number of houses for sale. When there are fewer houses, buyers are willing to pay more. Sellers have to leverage more to increase their asking price. Low inventory leads to higher home prices, as we've seen this entire last year, which is why houses have gotten so expensive outside of the last couple weeks. When it comes to housing for 2024, looks like it's, still going to be low. That's kind of what I think too. I mean, it sounds like they're still coming in, and I guess when I'm looking at them a lot, I'm looking at the 200K range for here in Wichita. Yeah, when you're at the 400 and 500, which is higher end for us here in Wichita, they'll stay on the market a little bit longer, but the 200s, we probably won't have enough inventory, so that's going to cause prices to go higher, multiple offers, not being able to ask for any concessions. Total housing in October was 5.1 in 2023 at 5.1% higher than the month before, but 2% lower than a year before. And I guess on this case, I'll just give you Wichita information. Buyer demand could sink in 2024, especially if it continues to increase the interest rates. Of course, we just heard from the last couple, Zillow and Redfin, that they're looking to go lower. So I see buyer demand picking up, obviously during the season. It always is going to pick up during the hardcore seasonality, with multiple offers and all that fun stuff again. But I hope a lot more listings come on. So home prices are likely to stay the same 2024, with some markets experiencing a small increase. And he's, again, just talking general, where I'd like to, but it's always good to hear what Dave Ramsey has to say. 15-year fixed rate average mortgage rates, and he's going on 15-year, which of course most people are talking 30-year. So it went down and spiked up again here in December. Yeah, that's true. Yeah. So it's now a good time to buy. The market shouldn't determine your decision to buy a house. I agree. If you're prepared financially, like we talked about earlier, it's a good time to buy a home, even if an inventory is limited and rates are high. If you're not financially prepared, it's not a good time, even if there's plenty of inventory, rates are low. Yes, I agree. Is it a buyer's market when there are more homes for sale than buyers? But since home supply is still low, it doesn't look like it's going to be a buyer's market anytime soon. I agree. Like that's why Redfin was saying it would be, but I don't see that. It's probably a buyer's market, and you got to look at different price points. It could be a buyer's market potentially in here in the 400, 500K, potentially. The good news is the market isn't as hot as it was in the past few years. If you're looking to buy, you'll have a few more options and maybe less competition. Not in our 200K range here, and obviously lower. Again, I still am shocked by like that house I was showing. I showed it a couple times to the buyer. They ended up not buying, but they got somebody else put an offer in. Just central part of town, immaculate condition. Because it was on for 5-ish days on the market, maybe a week. I mean, they could have gone with a better asking. They could have asked the sellers for more concessions based on just being on the market. So if you're looking to buy, you have a few options, maybe less competition. Prices are still high, but the frenzy is slowing down. Is it a seller's market? Will there be a lot of floor closures in 2024? No. So, well, I will stop there. I know there's another part. Rocket Mortgage has some cool stuff to say. I'll save that for a different video. But yeah, that's so looking at Redfin, Zillow, and some Ramsey, just some nuts and bolts of content about buying a house. Wanted to kind of give that to you today. So if you have any questions, looking to buy or sell in the Wichita market, want some more information, I'm also a loan originator, so can kind of look through numbers and work with a partner on my loan side. We can talk through that too. So hopefully this is giving you a little bit idea of what's going on in the market, coming up, market prediction. I'll do some more videos like this with some of the other tabs I didn't want to go through on this particular video, just to keep the content a little more manageable, so to speak. So anyways, thanks for watching. Have a great day. Reach out with any questions.